$23,192,148,690,000. Now that's a large number. You might be wondering what this number represents. This number represents the total value of stocks traded in the United States in 2019 alone. Now, you might also be wondering how the American stock market became so large. Well, today we'll be going over the early history and the modern history of the stock market and the effects of technology on the stock market. In 1611, the Dutch East India Company's first publicly traded company, and for many years is the only publicly traded company. This picture here is a picture of a stock certificate, and this stock certificate signifies ownership of the Dutch East India Company. In 1792, a small group of merchants created the Buttonwood Trade Agreements. These men met daily to buy and sell stocks and bonds, and this trade agreement was named after a sycamore tree which sat outside 68 Wall Street. It's depicted in this picture over here. The significance of this agreement was that it helped create trust between individual investors, public companies, and stockbrokers. And this is quite a small trade agreement. There are only 24 brokers, so not a lot of people trading, but this trade agreement helped create what we know today as the New York Stock Exchange. In 1923, an early version of the S&P 500 was created by Henry Barnum's Ford Company. And this original fund had 90 stocks, but the significance of this fund was that it helped create a snapshot of the American economy at the time. This fund eventually grew. Now it has 500 stocks, and these 500 stocks are shown in the picture here. In 1929, the US stock market crashes after a decade-long run known as the Roaring Twenties. And the main cause of this crash was margin buying of stocks. If you don't know what margin is buying stocks with money that you don't have, money you took out on loan. And once panic selling starts at this time, it kind of spreads like wildfire because there's no access to information at this time. The only way to get news is through newspaper or word of mouth, and it's not an instantaneous form of communication. So there's no way to reassure people, and the stock market crashes quite significantly. In 1971, trading begins on another U.S. stock exchange. This time it's the National Association of Security Dealers and Automated Quotations. This is otherwise known as the NASDAQ. The significance of this stock exchange is that it means that there's no more paper stock certificates. Technology has progressed to the point where computers can keep track of who's buying and selling stocks. In 1987, the Black Monday stock crash happens. The Dow Jones Industrial Average drops 22.6% in a single day. This is caused by new technology, and this new technology is automated computer models. The way that these automated computer models are trading causes investors to kind of panic and begin selling because of this kind of like uncharted waters. This crash is depicted in this New York Times article over here. In 2008, the stock market crashes again. This time, the stock market crashes mainly because of big banks giving mortgages to everyone, even those who are not creditworthy, and this causes mass defaults on home loans in the future. And because of this, there's lots of people selling houses, not a lot of people buying houses, and this causes the housing market crash. And there's also lots of people in debt now, loans they cannot repay, and this has ripple effects into the American economy and the American stock market. This leads to increased regulation in large financial institutions and big banks in order to help prevent an event like this from happening. In 2013, Robinhood is founded. Robinhood is a commission-free mobile trading app, and Robinhood experiences quite fast user growth. From 2015 to 2020, it grows by 7 million users, or 700%. The reason it grew so much is because it was commission-free and had simple interactive buying. Commission, if you don't know what it is, a commission is a small fee that stockbrokers charge whenever you buy a stock. Usually it's only a couple pennies, but it adds up, especially if you don't have large funds. It can prevent you from trading stocks. Because Robinhood removed this, they experienced quite significant user growth. In 2020, Robinhood grew so much that other stockbrokers began kind of copying their model, and commission-free trading kind of became the standard. And most major stockbrokers have mobile apps, and because of this, the amount of regular everyday people trading stocks increased. In 2019 alone, they increased by 240%. In conclusion, the stock market has grown quite significantly over time. Progressing technology has helped the stock market grow to the point where it is at now.